Now, coming up next, let us go to the next frontier of digital insurance landscape. And we are honored by the regional manager from Digital Business Munich.
Welcome, Mr. Mayank Joshi! Yay!
Hi, good morning. Is the sound clear? Fine. Okay. Good morning, everyone, and very warm welcome. Very happy to be here. Excited to be here, coming directly from Mumbai, and this is the first time that I'm in the Thailand market, and I see the vibrancy out here. It's amazing from the InsurTech point of view. So really excited. I am leading the digital business for Munich Re for the region, and that includes India, Southeast Asia, Japan, and Korea. And as a reinsurer, I think Munich Re has done quite a lot of developments into the insurtech space, and this is what I wanted to share about how the digital landscape and how we at Munich Re see the digital landscape evolving in the insurance segment. Yeah. Sorry. Yep. So from the macro point of view, if you see how the overall digital ecosystem has evolved, you would see that there are a lot of major factors that is changing in the overall economy, and why there has to be a digital is something that we have to ask too. So if you see from the overall Thailand market perspective, then of 69 million population in Thailand, 54 million people possess a smartphone, so which is close to around 80% of the population. Then you have 58 million internet users, which also gives that there are people who have smartphones and have access to the internet. And then there are close to 581 million transactions which are done online. So with those phones and with those internets, people are able to make transactions online. There is a banking penetration which is very high. So overall, close to 88% of the people uses the mobile banking. So most of the transactions that you made, you have the capability to make transactions online on the e-commerce platform, on the cab aggregator, travel platforms. And then obviously, the overall government push, which is the open door FDI policy. So there is not a firewall between a foreign player coming into the market, investing into the market and growing the market. So this is what we believe that really is a good breeding platform for digital as an insurance as well. Because if you see all these macro trends, that if an individual has a smartphone, has the internet, and also has the ability to do transactions online, then we are talking about people having more confidence to buy insurance digitally. Uh, Now, coming into the insurance, and when we see that the what lies as the future of insurance, we see a lot of buzzwords going around in terms of the insurtechs in today's context. Whether the insurance is embedded, you buy a product on Amazon, and then there is another insurance product which is attached or embedded to that. Or do you feel that the insurance is invisible, which means that you today do not know whether you are protected? It is being provided by the social security scheme, by the governments of the various countries. Or do you feel that the insurance of next world is going to be more engaging, where you would, the way you are currently doing as paper mile, paper pay as you go kind of an insurance. So it's very engaging from the client perspective. Or you feel that the insurance is going to be very tailored, that as an individual, when you buy the insurance, it is going to be very specific to who you are, what do you do in your life, and then it decide on how much insurance premium you pay. So we feel that the future of insurance is a combination of all the four factors, that it is going to be embedded, invisible, engaging, and tailor-made. Now, if you see some of the emerging innovation trends which are coming up in the industry, and we see that data enrichment, AI, and the telematics and IoT are some of the major trends that are emerging out of the current insurtechs. Uh, if I have to talk about data enrichment, now everyone loves a journey, a purchase journey where most of the information is already pre-filled, that you are filling up a form, but they already know that if my name is Mayank, then what is my age, where do I live, and how much do I earn. Now, if those informations are pre-filled, then you have a better user experience, and also the underwriting side of it is also not compromised. So I think there is a lot of data enrichment that is happening within this industry. There is a lot of cross-pollination which is happening with outside the insurance industry, where you are getting lot of information about individuals, and then you are able to use that for insurance underwriting. And this is where we see some of the large players like Experian, who is able to share the credit score about you, so which shares that how much is the propensity for you to claim or not, how much is the propensity for you to make a fraud in the insurance in the pie. So this is where we see a major innovation happening. The next factor is the artificial intelligence, and in AI, we have been using AI, and it's been kind of used and abused in almost all the offerings that we see. This is AI driven, this is ML driven. But if you see what really is changing through AI is the overall seamless experience of buying the policy, and the overall customer experience is changing through that. Now, if you take an example of Lemonade, there you would see that the overall, claim onboarding or the purchase journey of a customer is very, very minimized. Or you see one of the life insurance company, Lapitius, which, does your underwriting based on the selfie that you take. So there are lot of AI being used. If you see, go around, in this room, you would find lot of companies working on AI technology to detect the claims. So you would have your motor claims, which are being now managed through just a picture, and they would give you an estimate about how much the loss is going to be. So this is another trend which we feel is making the lives of consumer more easier, and becoming a higher priority from the consumer point of view when there is a buying decision. And lastly, the telematics and IoT. Now, the data information is, or the information or the underwriting information is not always supposed to be provided by the customer. The now overall mechanics, or what asset we are insuring, is giving us those information. So you take the example of cars. Now, with the connected cars, we are getting information about how badly or how in a better manner a car is driven. So why do we need to then go into about who the customer is or how they are been driving, when the car itself is telling how they have been treated? Same is with our homes. Now most of the homes are moving into the IoT, led smart homes. So that would also give us the health status of your assets, which would be able for us to ensure, underwrite in a better way. And for here, I've just mentioned two of the companies, and there are a lot of other insurtechs who are playing into this. Ticker is one of the company based in UK, where you have, when you buy the insurance, they install a small box on the windscreen, which enables you to manage the health of the car. So it doesn't need that the OEM gives you a connected car. You can make your, your traditional car a connected car through just a small box. And News is someone who is able to extract the data of these smart homes through the IoT devices that has been plugged in. Now, given this context, it's now important for us to understand that what are the kind of attachment, or share some examples of what are the kind of attachment insurance that we are already doing and executing in the market. And some of these product propositions are how helping the consumer as well as the distributor to create value for their customers. Now, the first example would be mobile insurance, and again, in mobile insurance, it's a very traditional product. It's not something innovative or new. But what is different happening in the mobile insurance is how it is being sold. In the past, the mobile insurance used to be serviced along, you have a mobile phone, and then you go out to a insurance agents or a distributor to buy this kind of a insurance product. But now with the embedded journey, this product is being able to be, attached when you are buying actually a mobile screen or a mobile phone. So, typically we cover on the comprehensive side, we cover on the screen damage side, and there is also a theft level of protection depending on the consumer. So there is a lot of data which goes into figuring out what kind of a deductible, what kind of a consumer, and what is the phone, product itself, asset itself, wherein to what extent we should be providing the coverage. And with this, mobile insurance, I'll share some example from India, where, this is the screenshot of Amazon. And, on Amazon platform, we started this, product proposition back in 2019, when all the smartphones that are being sold there would have an option to buy the mobile insurance, as an option if you see on the bottom, bottom right. Now, this is just a single click journey. So you're buying a phone which is worth 12,000 Indian rupees, which is around 6,000 baht, and you have an option to buy a mobile insurance which is close to around 400 baht as an insurance product. So as a consumer, the buying decision is so much not about thinking that is this an insurance product, whether will I get a claim or not, because somehow the trust factor that the companies, the new age digital companies have able to establish with especially the millennials is far less than we as an insurers have that trust with the with our customers. So now if it is sold on Amazon, then the customer is fairly confident that there is going to be a good service proposition that is going to be provided, and it just takes a single click. You click on that checkbox and then you would have an insurance in your inbox as an insurance product. Similar journey that we have done with a local e-commerce company in India, Flipkart. Again, you buy a phone and then you have an option to attach and click the insurance product. Now, going back as to why mobile insurance, I think, when you look into these products and you look into the, idea of why we are been selling this product, then these distributors typically would have lots and lots of, offerings, or, they would have their main focus on selling smartphones. Now, when I say that Thailand has been, 58 million people in Thailand has smartphones, which means there would be close to around 20 million smartphones which would be sold annually. Now, if you go to the point of sales of those smartphones and are able to attach this insurance product during the sale of the product, it enhances the overall customer value. This is what we were able to do for Amazon. This is what we are able to do for Flipkart. And this is how we add value to the end customer. Now, the second proposition which goes is on the extended warranty. Now, if you see on the extended warranty, again, as a consumer, if you are buying any electronic device, which is television, refrigerator, air conditioner, you're worried about the longevity of the device, that whether it's going to last for at least 4 to 5 years, because these are the investments that you make at least for 5 years. Now, if that is the case, and this is the anxiety of the customer that you want to protect, then you provide a extended warranty insurance, which can be given beyond the manufacturer warranty, which is typically a 1 year, 2 year warranty. So we double the warranty that the product has to offer. Now, again, this is a product that we started only offering with very large categories like televisions, refrigerators, washing machine. And now today, even the wearables like your smartwatches can be protected under this program. So as Munich Re, we have been supporting close to around 68 product categories. And that would be, like a vacuum cleaner or even a steam iron that could be, protected under this warranty. Now, this is again one of the example on how the products is being sold. You have the product, a television, which you want to buy on Amazon, and there you get an option, just a checkbox. And there is a deep integration that we have with Amazon, which provides the information, the unique identifying information about the product. Because as at the time of the claim, you do not want a customer dissonance in terms of whether this was the exact TV which was insured rather than any other TV that you are talking about. So, so we are making sure that the underwriting is correct. We are making sure that the claim process is correct. Now, both the programs, I think, for us as an insurer, we benchmark whether a product is successful by first whether the loss ratios is good or not. So that's one of the KPI that we track. But the second thing that we track about a product proposition is whether there is enough scale on the product. But for the companies, new digital companies, they track the business performance by NPS scores. Now, overall, Amazon as a platform has an NPS score of around 55 in India. And with these products, we have been able to achieve a NPS score of 76, which goes to shows that there is a claim. If there is a claim, we have been able to help the customer in much better or in a much better delightful way as expected by Amazon as an entity. Again, this is another example, another e-commerce company, but the similar kind of a solution that you are seamlessly buying an insurance product offering along with that. Now, I'll try, want to bring your focus into this, third product category, which is, cyber insurance. Now, cyber sounds very complicated as a product, where you're talking about, if you're selling a cyber insurance to a CTO of a company, then it's fine. The CTO understands what you're talking about in terms of data protection, in terms of firewalls, what are the kind of, protections and, antiviruses that you have installed. But as an individual, it's very complex for us to talk about, what are the identity theft situations that could happen. Has anyone ever happened that their social media accounts have been hacked? So we feel that as an individuals, it gets too complicated. So we have tried to create a product which gives a single line policy coverage, that there is no dissonance or there is no complication in terms of understanding of the product. We say that if there is a loss, a financial loss from your bank account, from your credit card, and this was not authorized by you, that's going to be protected by us as an insurer, period. So there is no ifs, there is no buts around, all that, because we see that there is a very large trend of phishing activities. There would be a lot of fake phone calls that you would have. If you see your inbox spam mails, you would receive a lot of emails from Nigeria's prince asking about at least $1 million, dollar money, or they would be asking about your credit card details so that you can help them. So with these kind of activities, I think we felt that this is really a relevant product and the need of the our product. And the other beauty of this product is that it can be sold everywhere. Now, you might think that a mobile insurance can only be sold with mobile. A warranty can only be sold with electronic. But with cyber, you can sell it with every product which is being sold on an e-commerce company, which is sold by a bank, and also which is sold by any cab aggregator or a telecom company. Because cyber, everyone, if you say 88% of the people are transacting online, that means 88% of the people would need cyber protection for their bank accounts. Now, this is again, a speaker, a Bluetooth speaker. One might think that what is the relevance of cyber insurance to a speaker, device that you are buying. But we feel that if you are buying a cyber insurance, this is a form of attachment. This is the, the infrastructure that we have. However, the protection is there because you are making a transaction online through your credit card or your bank account, which makes you vulnerable. If you are today buying a speaker, you might be again transacting on some other websites, which might lead to some exposure at your end, which may lead to a financial loss to you. So that's where we have been able to offer this product. And I'll be happy to share that we launched this product back in October 2020, and those were the days we were selling close to around 4,000 policies a month on the same platform, Flipkart. And now, today as we speak, we are selling close to around 6,000 policies a day. And that's the kind of scale that we have been able to achieve with this kind of a product and policies, because it becomes so relevant for most of the consumers. This is another example of how we are selling it. This is a telecom player. So, Airtel, similar to Vodafone and AT&T. So, under their app, we are being able to sell a cyber insurance cover, which again becomes a relevant option for a telecom company. Now, these are few of the funky more products that are coming up, and one might see that, what is going to be actually covered in that. We are going to be covering shoes. We are going to cover your clothes, and we are also going to provide covers for your spectacles. And this is something that we are launching somewhere in the month of November, again on Flipkart website, which would mean that if you bought a Nike shoe and within 3 months, within 1 month, or within 6 months, they were damaged. And they were damaged because maybe you didn't handle them well, but also maybe because the product quality was not as, same as expected based on your usage. So we would refund partial amount to you in terms of ability to get a new shoes back again. So we feel that with the new millennials, this kind of new products are going to be very, very attractive in terms of getting them understand the insurance proposition. Now, those were the attachment products where you are buying a product and then you are attaching insurance product. The other, set of products are data-driven products. And in this, I'll largely talk about 3 products. So these are travel-related products. Now, if you see flight delay, now again, flight delay is already a part of travel insurance. And within that flight delay travel insurance, your insurance provider would compensate you if your flight has been delayed for at least 3 hours or 4 hours. And what we have done in this flight delay insurance is we have created a product which pays you or which compensates you even if there is a flight delay for more than 60 minutes. So if there is a flight delay more than 60 minutes, then there is certain compensation that as a consumer you would get. And this is completely parameterized and has a total ability to function without any intervention. So as a consumer, when you buy this product, you do not have to intimate claims because we know which flight you are taking, and at the back end we have the connections with the flight radar and some of the other OTAs which gives us this live information about your flight delay, and we would be directly able to compensate you when your flight takes off. So example, if your flight took off 2 hours later than the scheduled time, we know what is the compensation that you are supposed to get, and by the time you land in your destination you will have money in your account. And we have used multiple data factors to create this kind of a product. So it goes as long as it goes to understand the holiday schedules, that's weather parameters. Then when the weather is bad, the delay chances probability would be higher. There are few regions which would be more exposed to typhoons in a certain period of time. Christmas is going to be very busy for the airports, so the delays are going to be higher. So there are close to 14 parameters which has gone inside to create these factors have gone inside to create this product which helps us to predict the risk in a much accurate way. The second is the cancellation for any reason, and you might popularly know this product as CFAR, available on Traveloka, available on most of the other platforms. So it gives the flexibility to a consumer to cancel the ticket anytime without giving any reason. Now, again, one might see, if I wear the hat of a underwriter and a traditional underwriter, I would see that, this is going to be abused, massively abused, that if you give an option to a customer to cancel the flight anytime, they're going to make use of this product. They will only buy the product when they feel that they would want to cancel the product. But again, we have created this product in so much with lot of enriched data, which gives us insight that if a consumer has a very low probability to cancel the ticket, we charge you a very minimum premium to that. And I can share an example wherein if a commuter books a flight ticket 3 days, 4 days in advance of the travel, that means the probability of the cancellation is extremely low. So in that case, for example, I can charge $10 as a basic premium. But if a consumer is booking a flight ticket which is 2 months in advance of the travel, the probability of the cancellation increases. So in those cases, I can charge $25, $30 as a premium, which would create a better portfolio and a better mix of a portfolio, safer risk portfolio. So this is again backed by data that Munich Re has a team of 200 data scientists which goes into the we have our own data lake, we have our own AI ML systems which are able to churn in these kind of data and create these dynamic kind of rates. And lastly, on the data-driven products is the parametric products. So within parametric, we see that lot of involvement in terms of the overall how the rainfall could impact the low-income groups. We have been able to offer some of the rainfall triggering and earthquake triggering, NatCat triggering products to to the fintechs. And this is also something that we are exploring with the e-commerce company, where we protect the delivery riders, where we protect the the cab drivers when there is excessive rainfall. If you see even here in Bangkok, if you have a situation of flood-like situation, as an insurer or as a driver, you would not want many cars to ply on the road. You would want them to stay back. So if we are able to protect them about the losses that they incur in their income because of the heavy rainfall, this is a product that can be created and given out in the market today. And lastly, the digital life product. So Munich Re also has automated and invested heavily in technology to create propositions on Munich Re, on the life offerings. So we have three main pillars. The traditional reinsurance is one of the main pillars that we already have, and there are a lot of partners that we work here in the market. Then there is financially motivated reinsurance, which is again a traditional arm of what we do. But there is the third pillar that we have created is the digital solutions within the Munich Re life setup that we have. And within the digital solutions, there are three key offerings that we have. So one is the Munich Re Health Tech, wherein we provide digital solutions for the health insurance company. Munich Re Automation Services, wherein we provide you underwriting engine. So as an insurance, this is going to be quite relevant if you are starting up, your health business right now, or if you are changing your, internal underwriting systems to a new system, or you are becoming more digital from the distribution point of view. These Munich Re automated system would help you to create product propositions on the go. It has the ability, it has the pricing engine, and it has the claims management system all integrated as a one single package. And lastly, we have the AI models which runs with the Munich Re engine as well. So the overall pricing, knowing about the customer data, how a customer's behavior is affecting the way the life insurance policies could be underwritten, is something that we have driven and created the AI engine according to that. How the typical journey would look like is, this is a conversation. This is not going to be a product proposition that can be offered on the go. So we usually digitize companies who are having the priority to digitize, their offering is going to be someone who would be very interested into this kind of an offering. And then we go into the underwriting, automated underwriting, where the Munich Re engine that we showed in the previous slide is going to help you to churn out much faster response rates based on the, based on the data set that and the AI that has been integrated into that. And then the predictive analytics and the modeling helps you to manage the risk in a proper way. That what are the renewals that you should focus on, which are the renewals that are going to turn out or are not leading to the same results that were expected at the beginning when you underwrote the policy. So and lastly, the claim bit, the overall claims management also forms a part of that overall engine. And lastly, I would like to, before ending, I would like to just share the quote of, one of our, team. So one of, CEOs of the company that Munich Re has invested in, that when we look around at the future of insurance, there are two parallel trends that can be seen. The first change comes from technology, which will impact the risk. And the second will change is how insurance will be serviced to the customers. So there are two major factors that would change. That is the technology, and that is going to, and the other is the service. So that's all, from my side. So I have my colleagues along with me, and we'll be around for the day, and we'll be happy to chat and interact with you over a period of time. Thank you.
Thank you. Thank you very much, Mr. Melnike. Please remain on the stage, and I would like to invite Kun Mayurin to present a token of appreciation to you. Please ขออนุญาตเรียนเชิญนะคะคุณมายุรินทร์ค่ะสุทธิรัตนพันธ์นะคะท่านผู้ช่วยเลขาธิการสายกลยุทธ์องค์กรนะคะจากทางคปภนะคะได้มอบของที่ระลึกนะคะให้กับท่านวิทยากรค่ะ
Thank you. Thanks.
ค่ะ Please take a group photo together.
So, thank you very much. This has been very useful. And now this concludes the session.
Regional Manager from Digital Business Munich Re. Thank you very much for your interesting information. แล้วก็ทั้งนี้นะคะเดี๋ยวในลำดับถัด
And next we'll have a break. So thank you, Kun Mayurin. Then we will have the update of technology from C-Tech in the next session. So now let's have a break, and then we'll resume the next session.